This video is for Chapter 19 from your Century 21 Accounting General Journal textbook, Edition 10. Chapter 19, Lesson 4 on recording the disposal of plant assets. And so we are using our plant asset records from Work Together 19-3, which in my work is just back one tab here for the 19-3. And I will guide you through this example. So it says, for each of the following transactions completed in 2024, journalize an entry for additional depreciation if needed. Use page 15 of the General Journal given in the working papers, or just on this tab. Source documents are abbreviated as follows. Memorandums are M's, receipts are R's. So our first transaction is on January 5th, received cash for the sale of a display case. Since this is in January 5th, right at the beginning of the year, we are not going to need to journalize an entry for additional depreciation. So as far as part 1 goes, we'll skip this entry. However, August 10th, we will have been through a good chunk of the year, right? 7 months of the year already. So we will need to journalize our additional depreciation on this one. So let's go back to August 10th, and let's just go ahead and journalize that depreciation here on the last tab, or let's just figure out what it would be, I guess, right? So this is for our workstation, 2024, and if we needed to do just 7 months of this, we would take our $960 total annual depreciation times 7 months out of 12 months. And we would get $560 to depreciate before we dispose of this asset or sell it. So our new accumulated depreciation would add that $560. And then our ending book value would be depreciation, would be the previous year's book value minus our depreciation expense there. So 2,080 left is now accumulated, I believe. So we can use this amount, this 560 is what we'll need to journalize over here in 19-4. So on the date of, was it August 10th? Yes. So it would be 8/10/2024. Our depreciation expense for office equipment and our accumulated depreciation of office equipment will need to, I believe, Memorandum 61 increase by $560 before we can dispose of this asset. Okay, so that should be this first part. Now we use page 3 of our cash receipts journal, so page 3 of this cash receipts journal, to record the disposal of each plant asset. So here's our January 5th, 2024, the year, and we need to have accumulated depreciation store equipment, because we will need to cancel that out so it goes away. We'll need store equipment, because we'll have to reduce that, and we'll find out if we'll either have a gain or a loss. We'll figure that out on plant assets, and then we'll just fix this. Okay, so let's think through it. We received cash of $3,000, so that will be our cash debit. The accumulated depreciation on this asset, which is our first one, at the end of 2023 was $1,440. So that's what we would put here, because accumulated depreciation is a credit balance. So we are going to debit it to zero that out, okay? And then how about our store equipment? The original cost of $4,040 is what we need to get rid of out of our books now since we're disposing it. So we will credit for $40.40. And then we've got to figure out what is the difference, right? Because we're either going to have a gain or a loss. And if we have a debit of $14.40 and a debit here of $14.40, the difference has got to be, it looks like the credits. So it'll be a gain. So we'll add this one plus this debit minus the credit we have in store equipment. And that leaves us with a $400 gain, right, on plant assets. Okay, and the number, receipt number 217. Cool. Our next one will be on August 10th. And again, we'll have accumulated depreciation, and this one's for office equipment. And we will have office equipment, and we're either going to have a gain or a loss again, right? We'll have to think through what that's going to be. So the first thing we know is, what is our accumulated depreciation? That number is back here on our last tab. Accumulated depreciation on our second asset. Here it is. The workstation should be $27.20. Okay. The office equipment, we've got to zero that out, would be our purchase price on that, $4,800. And the cash we received, according to this, was $2,000. So what we can see now is that 2,000 plus 2720 is not going to be more than 4,800, right? It's going to be 4720. So there is going to be a loss. So what I would do, you should, since a loss is going to be a debit, it should be listed first. So let's move office equipment down one, because that's going to be your loan credit of, we'll just do this. Copy, paste. Okay, oop, undo. Down there, perfect, delete. And I don't like what happened with our formatting. There we go. So now, the loss on plant assets is going to be your two debits, actually your one credit minus your debits, $80 loss. Do we have it all? And this is going to be memorandum 61, which was up above, right, in our general journal, and then receipt 281. Okay, we make appropriate notations in the plant asset records. Now we get to go back to our plant asset records and note what we have done here. So the plant asset records are on tab for 19-3. You might notice I added this. I realized I left out a section when I made this for you. So now it's here. And the disposed of section, right? Was it our first one, the display case? It told us that we received cash for it, so we basically sold it, right? And we received cash for the other as well, so we must have sold both. So we sold it. We'll mark sold on both of these. And this first one, what date did we sell it on? Was it January the 5th? And the other one was August the 10th. So the date was January 5th, 2024. And this one was August the 10th, 2024. And the amount we got for it was back here. We got $3,000 on the first one and $2,000 on the other, right? Yes. So that would be the end of making appropriate notations in the plant asset records. We have shown that they were disposed of and on what date. So we've recorded any additional depreciation needed when we sell or dispose of a plant asset. We recorded those journal entries in first the general journal and the cash receipts journal, and we notated the sale on the plant asset records. So we are done with 19-4.